Imagine a world where algorithms analyze millions of data points in seconds, predict market trends, before human traders even blink, and execute flawless trades around the clock. That world is already here, thanks to AI-powered investing. But the big question remains, can these smart bots truly outsmart Wall Street's sharpest minds? In this video, we dive deep into how AI is transforming the investment game, and whether it's really possible for a machine to beat the market legends. Today, we will talk about AI-powered investing. Can a bot beat Wall Street? So before we start, make sure to hit the like button and subscribe to my channel. Understanding how AI-powered investing works. AI-powered investing leverages technologies such as deep learning, reinforcement learning, and neural networks to make data-driven decisions. Unlike traditional models that rely on fixed variables, AI continuously learns from new information. For instance, a machine learning algorithm can process historical market data, global news, social media sentiment, financial reports, and even satellite images to identify trends and predict stock movements. AI models, such as those used by hedge funds or robo-advisors, can autonomously decide when to buy or sell assets based on probabilities and patterns invisible to human eyes. These bots can scan millions of data points in seconds, far beyond human capability. Key players and tools in the market. Many hedge funds, fintech companies, and investment platforms have adopted AI to various extents. Renaissance Technologies, a quant fund founded by mathematician Jim Simons, has famously outperformed traditional funds using mathematical models. And although its algorithms are proprietary, they rely heavily on data science, a precursor to AI. Another example is 2 Sigma, a fund that employs machine learning, statistics, and distributed computing to manage billions in assets. Retail platforms like Betterment and Wealthfront use robo-advisors, automated software driven by AI, to create personalized investment portfolios for users. BlackRock, one of the world's largest asset managers, has incorporated its AI system, Aladdin, to analyze risk and portfolio dynamics globally. Meanwhile, tools like ChatGPT, OpenAI Codex, and IBM Watson have begun integrating into investment research, offering suggestions and analysis that reduce the burden on human analysts. Data is the new currency. One of the primary reasons AI has gained ground in finance is its unparalleled ability to process and interpret massive volumes of data. Wall Street decisions depend heavily on data, earnings reports, economic indicators, inflation rates, geopolitical events, consumer behavior, and more. AI not only digests this data, but also finds hidden correlations that humans might miss. For instance, it can detect subtle changes in market sentiment through language patterns in tweets or Reddit posts, or track consumer spending through anonymized transaction data. This gives AI a powerful edge in forecasting short-term market movements and potential risks. In the fast-paced world of trading, milliseconds matter, and data-driven bots often have the upper hand. High-frequency trading, HFT, and AI synergy. One of the earliest and most profitable applications of AI in investing has been in high-frequency trading, HFT. In HFT, trades are executed in fractions of a second to exploit tiny inefficiencies in the market. These trades are not about long-term strategy, but rapid-fire, algorithm-driven transactions. AI enhances this by predicting short-term patterns, reacting instantly to market shifts, and reducing human error. Firms using HFT and AI, such as Citadel Securities and Jump Trading, generate billions in annual profits. They harness not just raw speed, but the predictive power of AI to stay ahead of competitors. Although controversial, some argue it contributes to market instability. HFT powered by AI has undeniably reshaped trading floors. AI versus human judgment, the ongoing debate. Despite AI's impressive capabilities, there's an ongoing debate about whether it can truly replace or consistently outperform human investors. AI thrives in environments where rules are structured and data is plentiful. But financial markets are influenced by unpredictable human behaviors. Irrational fears and black swan events like the COVID-19 pandemic or the 2008 financial crisis. Human investors can consider context, ethics, and emotional nuance, while AI operates on logic and training data. Moreover, AI models can suffer from overfitting, when they perform well on past data but poorly in future conditions. For this reason, many experts argue that the future lies not in AI replacing humans, but in hybrid models where human intuition complements machine intelligence. The limitations and risks of AI investing. While AI offers enormous potential, it is not without its flaws. One significant concern is the lack of transparency. Many AI models, especially deep learning networks, operate as black boxes, where the rationale behind decisions is not easily understood. This raises regulatory and ethical issues, especially when managing billions of dollars in public or private investments. Another challenge is data bias. If the training data includes flawed or incomplete information, the AI's predictions can be skewed. Flash crashes, sudden market drops caused by algorithmic errors, have also occurred, underscoring the dangers of over-reliance on automated systems. Furthermore, widespread adoption of similar AI models can lead to herd behavior in markets, increasing volatility and systemic risk. Democratizing investing with AI. Despite concerns, AI has opened doors for average investors who previously had limited access to sophisticated financial tools. Robo-advisors now offer low-cost portfolio management with automatic rebalancing and tax loss harvesting. AI-powered apps like Zackstrade, Trade Ideas, Tickerin, and Kivoup provide investment insights based on deep analytics. AI also assists in credit scoring, risk assessment, and personal finance management, helping users make informed decisions. As these technologies improve, we may witness the emergence of fully AI-managed funds accessible to anyone with a smartphone, further narrowing the gap between Wall Street and Main Street. AI in global markets and cryptocurrencies. AI's role isn't limited to traditional stock markets. It's increasingly being used in global forex trading, commodities markets, and especially in the volatile world of cryptocurrencies. Crypto assets, driven by sentiment and 24/7 trading, are a prime playground for AI. Bots like 3 Commas, Krill, and Napits use technical analysis, news scraping, and sentiment evaluation to automate trading strategies. These systems can react instantaneously to news events or social media trends, essential in crypto, where a single tweet from a celebrity can trigger massive price swings. The future of AI in investing. Looking forward, AI's influence in investing is expected to grow exponentially. Advancements in quantum computing may eventually allow for ultra-fast, complex market simulations. Predictive models will become more accurate as they ingest years of additional data and improve in real-time adaptation. AI will not just recommend trades, but dynamically reshape entire portfolios based on evolving goals, life events, or even psychological profiles. We might see decentralized autonomous funds, fully AI-managed investment entities that operate without human managers or central institutions. Can a bot beat Wall Street? So, can a bot beat Wall Street? The answer is complex. In certain areas, like high-frequency trading, real-time data analysis, and quantitative strategies, AI already has an edge. Bots can outperform humans in terms of speed, consistency, and emotionless execution. However, beating Wall Street in the holistic sense means not just excelling at trading, but managing risk, navigating crises, understanding macroeconomics, and adapting to unforeseen human events. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.